Hi, my name is Ansamana and welcome back to my channel, My Tax Guy. I created this channel to help people every day understand the tax code a little bit better so that it's demystified and they can maximize not only their refunds, but what those refunds can do for them as far as improving just their financial futures. Now for us, a couple of quick housekeeping notes. First and foremost, I want to thank everybody that just turned out for my first video. I really appreciate all of the feedback that I've gotten and all of the support from everyone. I really want to reach 1,000 subscribers by the end of the year, so keep liking, keep sharing, keep commenting, and most importantly, let's all get as many people to subscribe as possible. I want to make it to 1,000 subscribers by the end of the year. With your help, it'll be completely possible. On to a few housekeeping things on the disclaimer note. I did add a disclaimer to my first video, and I'm going to be adding one to all my future videos just to make sure that everyone understands the real purpose of this channel and what I'm really setting out to do. It will be in the description box, so just take a look at it and we can go from there. Now, on to my topic of the day, which is the continuation of the Schedule Cs. Schedule Cs are self-employment or independent contractors. Some people call themselves entrepreneurs. If you fall into that box where you're basically working for yourself, there's a couple of things you need to understand about how self-employment, contracting, entrepreneurship, how that really affects you as far as the IRS sees it, especially when you're using LLCs. Some people have said that you should form those things so you could take greater deductions, and there's certain things that are allowed on Schedule Cs that aren't allowed anymore with individual tax returns. And I'll give an example. Work expenses. The IRS no longer allows those any sort of job deductions on your 1040 schedule. That's been going for about 5 years now, so no need to look for them. They're completely gone. However, some states do, and there are only 6 of them. Now, what you have to understand about those 6 states, that they are very litigious as far as looking over your tax return. They will send you a note in the mail for you to substantiate it because of just of the sheer amount of money that it would take for that deduction to kick in. So, for instance, in New York, the standard deduction, depending on your filing status, could be anywhere from $11,200 to like $14,000. It's really going to depend on, it'll really depend on your filing status. What you do have to understand though about that is when you take that deduction, when you go say, hey, I'm going to take an itemized deduction, you have to be able to substantiate all of those expenses you are writing off for your work deductions. And for your Schedule C, you have the same requirement times 10. Not only for Schedule Cs do you have to substantiate the deductions, but you also have to substantiate how you earn that money. It's not enough for you to say, hey, someone sent me money and I'm in my bank and now I'm an entrepreneur or I'm a contractor. That's not how that works. That money must have purpose, and that purpose has to be from your business. So just saying that I've gotten the money because someone sent it to me does not mean that it's money where you can say that can substantiate you trying to write off a bunch of expenses through the course of the year. Anyone who tells you to do something like that, I would be very concerned about the kind of advice that they're giving you, because it's bad advice, and it will usually get you in trouble with the IRS and with whatever state you're in if you have state taxes that you have to worry about. Now, as far as the LLC portion and taking advantage of Schedule C, that portion is a little bit different for a couple of reasons. The LLC does offer you protections when it comes to civil matters. However, it does not give you the same protection when it concerns the IRS. The IRS treats LLCs by sole proprietors or sole proprietor LLCs as something called a disregarded entity. Simply put, you, the person, cannot be separated from your business. The purpose of LLCs, though, when people form them, when they're doing legitimate business, is to give them protection, especially when they're dealing with the public in matters that concern service, in matters that concern things like finance, things that concern just anything. You could be a babysitter, a teacher, you could be an accountant like myself. You can be a tax preparer also like myself. You can also be somebody like a truck driver. Any of those professions where you're basically one-on-one with a person or one-on-one with another business entity, you essentially want that there to give you protection in case they come after you. You'll be limited to just the assets of the companies and that sort of deal. However, that does not apply when it comes to the government. The IRS and the SEC, but mostly the IRS, they do not separate you from it. You are your business is you. So if you have a balance at the end of the year, it is not something where you can ignore it and say, hey, well, that's the business's problem. I don't really have to worry about it. It's not true. Even if the next year your business goes belly up, the fact of the matter is you're still ultimately responsible for that. And that's irregardless to the fact of if you file an 1120, a 1065, sorry, not a 1065, but if you file an 1120 or an 1120S, irregardless of either of those things, if you're filing that form, those are corporate filing tax forms, by the way. Irregardless of any of that, if you put them down on the tax return with your 1040 or it's separate, like in those other forms I mentioned, absolutely makes no difference. You are liable for that balance. They will come knocking on your door to collect. So it's very important for sole proprietors to understand that they're not separate from their business. You are your business is you. You have to take the necessary precautions. In my previous video, I did discuss ways to make sure that you are keeping track of your expenses using accounting software, using payroll software, creating an Excel spreadsheet with labels and things like that, where you're just basically just doing basic things like entering it and things like that. They even have certain apps where you can take pictures of receipts for rebates. And that's really a great thing where you go, hey, I get a rebate coupon for every 10 receipts I scan. Doesn't even matter where the 10 receipts are. But that's a good way to keep up with it because now there's another record of your receipts that you're using for your business. And those are the things that you have to do in order to substantiate the expenses. Now, as far as your income goes, if you're dealing with people and you're using things like Cash App, Venmo, PayPal, and stuff like that, my recommendation is if they're paying you for your service, whether you're the hairdresser, babysitter, whatever it is, you need them to label what they're sending you. It is not good enough for someone to say, hey, I paid for your service. Here's $100. So you want to make sure as much as possible that you're getting those people to fill in that memo line. Just simply put whatever it is. Hair braiding, barrettes, babysitting. I had to pick up in Tulum. Those are the things that you have to do in order to make that process a lot easier for you. Lastly, and probably most importantly when it comes to your Schedule Cs, please always remember that if you do have an LLC, you want to make sure that you're putting your EIN on your tax returns. I know when it comes to the 1120 and 1120S, that's not really the biggest problem. It has to be there because the entity name is there, so the EIN has to go on there. However, a lot of people will have LLCs and have their business and will not put that on their tax returns. And that kind of is a hindrance for you because you want to maximize the amount of your refund as well as reduce your processing time. When things like that happen, sometimes you may just need to do something simple like fax, or in some cases, especially with the IRS, they may require you to fax in your EIN, your entire tax return, all the supporting documents that it took to create your tax return, everything. So it's really important that you don't forget those things so that you're in there, that you're in the system. Oh, one more item. That wasn't the last thing. This will be the last thing, I promise. The last thing, and probably the other thing that's very important, is paying estimated taxes. I cannot tell you the amount of contractors and independent artists or independent workers, entrepreneurs. You have a business, but you're not paying taxes through the year. You should be paying taxes through the year, quarterly. You have April 1st, July 1st, October 1st, January 1st. I set it up like that because it's always easier to do things at the beginning of the month or at the end of a prior month than it is in like the middle of the month when those things are technically due. It's much, much easier to do it that way. The other days is really supposed to be April 15th, July 15th, October 15th, and then January 15th. In that time, you're supposed to make sure that your payments are in, that you are making sure those payments are there so that it reduces the amount of money you have to pay when it's time for you to file your full return. That's one. The other thing is that it also helps you at the end of the year because then instead of having, in a lot of cases, a really big tax bill at the end, you have maybe a smaller bill. You may even be entitled to a refund, and that's because there's actually taxes paid on your tax return rather than just waiting and seeing what it's going to look like, and depending on the credits that may get used up trying to cover the difference between what you should have paid in taxes and how much you actually paid, which in a lot of cases, unfortunately, is a zero. So you want to make sure that you're also putting those things in. I want to thank everyone once again for tuning in. Hopefully I can have more material for you this week coming. I want to really go over things like your W-2s and your 1040s, things like that. I'm going to try to set up a live calling show this coming Saturday so that everybody can really participate and really start getting a feel for, really just how taxes work. It's not the hardest thing in the world to feel a little discombobulated when dealing with taxes, but it's perfectly natural, and I'm here to help you through it. Okay. I want to thank you guys once again. My name is Ian Samana, and this is my channel, My Tax Guy. Have a good day.